Hi, and welcome again to another edition of Market Analysis for today, January 30th. I'm Giovanni Benacourt, analyst, trader, and operator with Vantage Markets. Well, we're going to have a pretty nice, busy week. The Federal Reserve has carefully managed expectations for a quarter-point interest rate hike this week, the smallest move since it started the most aggressive tightening campaign in a generation last March. The challenge for Chairman Jerome Powell on Wednesday is how to guide markets after that. There are some big reasons to be optimistic that most of the battle with inflation is over. Headline rates of price gains are coming down rapidly. Last week, data showed the core personal consumption expenditure deflator, the Fed's preferred measure of inflation, cooled to 4.4% from 4.7%. Anecdotal evidence from earnings season so far shows most companies preparing for a downturn. Job cuts that started in the technology sector are showing signs of spreading elsewhere, with more than 100 S&P 500 companies reporting this week, including big tech names such as Meta Platforms and Alphabet, but also General Motors and McDonald's. More evidence is on the way. Traders certainly think the Fed will be able to stop soon. That's why the S&P is up 6% so far this year. The tech-heavy Nasdaq has gained 11% so far. On the other hand, the labor market still looks tight. The unemployment rate is currently matching the lowest in about 50 years at 3.5%. The risk is that a rate that low gives workers enough bargaining power to bid up their wages and embed faster than desired inflation in the system. Now, on another front, the recent jump in lumber prices suggests housing activity may be crawling back to life. The key building commodity, which was one of the worst performing commodities of 2022, is up 33% so far this year. Its latest rise comes as spending home sales unexpectedly jumped in December and home builder confidence made a surprise comeback in January. That's coincided with gradually easing mortgage rates. The average 30-year fixed mortgage peaked above 7% last year, but now hovers closer to 6%. All this is happening against a backdrop of cooling inflation and an ostensibly growing economy. So with that being said, let's take a look at what we can expect now that the markets are open. So we had a green day on Friday. We closed with prices moving market higher, but today we have opened at gap down. This could be obviously the market telling us that it's getting ready for perhaps more pain from the Fed on Wednesday. So the market is being cautious, I suppose, in this scenario. Now, what we can take from here is that perhaps we'll come down to 12,000 as our support, and then find some footing here, some buyers to take the market higher, move the market higher, or probably the market could also just stay idling, just fluctuating around the 12,000 marker, just waiting for that decision from the Fed on Wednesday. So just be cautious in today's movement. Or at least in the S&P 500, we have seen that the market has come to close that gap. Closing the gap means that at least we are in the previous body of the range of the previous body of the previous day. So we are in the range of that previous body. Now, to close we should come down to where this candle closed. But basically, we could be seeing here anytime soon the market turning around and just heading back down south, or just really hitting that resistance of 4,100. Let's see what would happen from here. The same token goes for the Dow Jones. The Dow had opened about 100 points lower, but now we have definitely closed that gap on the Dow Jones Industrials. So I'm shooting for my resistance of 34,500 for today with that continuation. And also on the Russell. The Russell has also closed that gap and is pushing higher. Will we reach? I'm going to actually change my resistance to 1920 for the Russell. Okay, so there we have 1920, 1880 is my support. Then we have crude oil. Crude oil just dipped down to below 78, but quickly, is looking to fluctuate above it. we have the 21-day moving average as as a resistance right now, dynamic resistance is above the market. So will we continue to see some selling pressure for crude oil? That could be the case. That could be the case. I mean, we have been pushing higher above 80 throughout last week. So we could probably see some profit taken. We did obviously open up, gap down, but we did have a negative, well, a red day on Friday. So that sell-off could continue, perhaps could continue. Then we have Nat Gas that has really been on a tear. Looking at 250 as a support, as a footing for Nat Gas. Looking for it to just really stay on a tight range between 250 and 325. Then we have gold, which I see gold really staying up close above 1920, below the 1950. This in this very tight range. Consolidation stage will be contemplated here for gold. The same token goes for silver. Silver is really fluctuating around that 2350 marker. So a lot more side trading. Just this is going to be very choppy, guys. I would really just stay out of it unless you're a scalper, and that's exactly what scalpers want. So, in the case for copper, copper is also looking to stay to sustain its valuation or is a strong movement to the upside around 420. But 430 has been really well for it, the resistance level. So perhaps we'll later on in the week we'll come and test that resistance of 43 of $4.30. Then we have the euro. The euro is also looking strongly to stay above 108, looking to see if it'll finally, break that 109 resistance. Then we have the pound that is trading actually lower, okay, and really bouncing up that 124 resistance level. But perhaps the 123.50 will be the support for it. Very tight range also. As far as the dollar index goes, yeah, dollar index is looking to stay really in this very tight channel of 102 and 105.50, 101.50. So be worried about that. Okay. Well, that's it for me today. And don't forget, next month we'll be doing some live trading.